Hello, in this presentation we will record the receipt of payment and the making of the deposit within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be a little bit more ambitious here in that we're going to record both the receipt of payment and the deposit so we can see both of those activities happening. In order to do that, we're going to go up to this little plus icon where we can see the transactions and select this plus icon. Transactions laid out by customer, vendor, employee, and other. What we're doing here is basically the receipt of the payment. So if we go through the process then, what must have happened is we invoiced somebody in the past. Generally, this is how the receipt payment would work within the customer or receivable or sales cycle. We're going to invoice the customer, and then within the mail, we're going to get a payment, probably in the form of a check, and that's when we will have the receipt of the payment. Now, when we receive the payment, however, we're not just going to record it into the checking account necessarily. We are going to group it together, and then we'll record the deposit, and we'll group all the deposits together at one time as we put them into the bank so that they appear in our system in QuickBooks in the same format that they will show up on the bank statement from the bank, and therefore make it easy for us to check the two things off, verify that we are correct, we tie out to the bank, and reconcile. So the first thing we're going to do then is we already did the invoice. We're going to receive the payment. So we're going to imagine here that we got a check in the mail. We're in our office in the Get Great Guitars office, and we have a check that was received from a customer, and we're going to enter that into our system here. We have the received payment up top. We're going to just enter the data input. We're going to say that the payment was from Anderson Guitars. We could select the drop down to find Anderson Guitars and or type in Anderson Guitars, which will auto-populate, Anderson already being a customer set up. We're going to tab through this information. The date is going to be 01/28/21. We are working in the future in 2021, and January 28th will be the date we will be using. We're going to say that we got a check, so the payment type is going to be a check in the mail. Reference number, we're not going to include a reference number. It would be, it could be good to put the reference number of the check number, not required. However, it's good to go back to have more information is always better. And then we're going to have the deposit too. And remember, it's not going to go to the checking account for us because we're not going to deposit it to the checking account check by check. We're possibly receiving more than one check at any time, and we want to make sure to group the deposits in the same format. If you are depositing check by check, say you're going to the bank every time you get the check, or scanning the checks, somehow electronically depositing, then it might be making sense to just put this to the checking account so that, because you won't have a problem with tying out the bank account. But if we're grouping the checks together, that's when you might want to use the undeposited funds and then go to the bank and group them all together. That'll really help with the reconciliation process, which is important to do. That's one of our major checks that we have on making errors, against making errors. So we're going to put it to these undeposited funds accounts. And then we're going to say that we could put the amount here, but we're going to start off by just checking off the invoice. So we're going to check the invoice, and that will auto-populate the amount up top. If, of course, we receive some amount less than the 430 total of the invoice, then we can put that amount here, and then we would still have some left over from this invoice. This clearly would be the invoice. This is the invoice that we had in the past that we created for Anderson Guitar, presumably for a guitar that was sold, and now we are receiving payment for that. So when we record this, then it's going to be a journal entry that will be recorded. The journal entry will be cash is going up. Not the checking account, however, this account called undeposited funds, which we will put into the checking account later, and the accounts receivable is going down, specifically the accounts receivable related to what is owed to us from Anderson Guitars, that being no longer owed to us because that company has now paid us. So then we're going to say save and new, and let's see and record this one more. We're going to have one more sales receipt to record before we go ahead and deposit this at the end of the day. The next check we were lucky enough to receive today was from Eric Music, so we're going to select the drop down here up top, and we can select Eric Music and or start to type in Eric Music and it will auto-populate. So there is Eric Music here. We're going to tab through this once again. We've got the payment date of January 28th, 2021. Payment method will once again be a check, so we're going to take a look at the check. That will be the payment method. No reference number. If you have the check number, probably would be a good reference number to use, but we're going to leave it blank for our purposes. We're going to put it once again into this undeposited funds accounts that we set up to be a holding account until we make the deposit. Then we have the amount. We're not going to put the amount here. Once again, we're going to check off the invoice, and if this is the amount we received, we've got full payment. If we want to apply it to that invoice, which we do, we can check off that invoice, and it will then apply that amount to the invoice and auto-populate the received payment amount. If we, of course, received less than that amount, we could put something less than that amount there. If we received some payment for something other than this invoice, then we could uncheck that and just put the amount here, and we would in essence have a credit that or overpayment. The use of debits and credits can be a little confusing in terminology. We'd have an overpayment that we could apply out for this particular customer to somebody. Once again, the journal entry here being an increase in cash of undeposited funds, a check that we have now, and a decrease in accounts receivable. We're going to say save and new one more time. Let's take a look at the financial statements, and then we'll go ahead and deposit this information. So I'm going to close this out. We're going to go to the reports on the left-hand side, and we're going to run the balance sheet report. And running the balance sheet, we're going to change the dates to, once again, the year that we are working in, 2021. So 01/01/21 to 01/31/21. So January 1st, 2021 to January 31st, 2021. We'll run that report, and then we can see within the undeposited funds down here, that's where we put this information. That $955.50 is now being included by this $450 and that $525, I believe, the two payments just made that we've recorded on January 21st as a payment from Anderson Guitar and Eric Music. If we select either one of those, we will see one of the payments that we have received and input. We're going to close that back out, and let's look at the other side by scrolling back up to the top, and we're going to go back to our report, which is the balance sheet. The other side was going to the accounts receivable account. So here's accounts receivable. If we select accounts receivable, we then scroll down. Here's our two payments once again from Anderson and Eric Music. If we select either of those, we will once again see the received payment amount. So we'll close that out, and now we're going to go directly to the deposit area. So now we're going to deposit these payments we've got. We're imagining it's the end of the night. I'm going to select this drop down so we can see a little bit more of the activity in a kind of like a flow chart area. So we have invoiced, we've received the payment. Now it's the end of the night, and we're imagining we're going to the bank, depositing the payment. We're going to deposit and group them both together and make one deposit, not two deposits. And therefore, we want to make sure that we group them together within QuickBooks so that we can tie them off as we reconcile the bank reconciliation to the bank statement from the bank. So in order to do that, we're going to make a deposit. We're jumping over from the customer section to the other section to make a deposit. And really, this is a deposit, hopefully, is mainly kind of part of the customer or receivable cycle most of the time. Hopefully, most of our deposits are coming from customers, so it's kind of part of the customer section, but obviously we could have other deposits as well, so it's in the others section over here. So we're going to say bank deposit, and we're going to say that we want the checking account. This is going to be our main checking account. The date of the deposit we're going to say is 01/28/21. We went to the bank. This time more in terms of a normal process. We had a bit of a delay in some prior presentations we had so that we can group transactions together, which means we held on to a lot of deposits for a long amount of time before depositing them. This would be more of a normal transaction, hopefully, where we collect money throughout the day and we make the deposit at the end of the day and we're not holding on to checks. And then we're going to go down here and check off the two checks that we will be depositing, this one and this one, the two that we just made, Anderson Guitar and Eric Music, now being populated because we used that undeposited funds account. So that gives us a total of $955.50 that will be deposited, and that of course will increase the checking account amount. The other side of it will be decreasing the undeposited funds amount. So that other clearing account is what will be going down. So then we're going to save and new on this transaction. And let's take a look at those financial statements one more time. We're going to close this back out. And the financial statement is still here. If it's not, you run report once again and go to the balance sheet. I'm just going to scroll up to the top and we're going to go back to our report summary. And then we're going to go to now the checking account and see if that amount has indeed appeared as we believe it should, which is that $955 right here. That deposit has now shown up in the checking account. That's a good sign. And then we're going to go back to our report and scroll down, and this is the undeposited fund, our clearing account. If we select that 0, then it has gone back to 0, and that's what we want because it's really just a clearing account. Hopefully it should be 0 at the end of every night. It should be 0 in the morning, we collect money, and then we deposit it in the bank and it goes back to 0 at that point in time. That should be the track we kind of see here. Obviously we don't quite see that at the beginning of our problem because we weren't quite set up to the system yet, and we're kind of changing the dates around to what would actually happen in order to group similar transactions. But this type of activity, us putting the deposits in, it's at 0, we do some activity, and then it should go back to 0. That's the type of activity you should see in the undeposited funds. If we have a lot of money in undeposited funds, something probably went wrong. We might have entered deposits 2 times somehow, and we'll have to make some type of adjustments.